President Biden says the American banking system is safe, and those who relied on the two banks which recently went under will be protected.
His assurances, however, aren't calming all fears. More banks could be on the brink of collapse. Lauren Blanchard is in Washington with more.
Exactly what happens over the next 12, 24, 48 hours is, we're not sure how this is all going to play out.
A choppy day on Wall Street and uncertainty for many small businesses and startup companies after the collapse of two major banks in the last 3 days. President Biden has tried to reassure Americans his administration is handling it.
Americans can rest assured that our banking system is safe. Your deposits are safe.
Silicon Valley Bank and Signature Bank have been taken over by regulators. Other smaller banks are being closely watched to avoid a similar collapse. There was panic that depositors would not be able to access their funds over the insured maximum of $250,000. But after emergency moves by the Treasury, the funds have been made available Monday. Unlike the 2008 bank bailout, President Biden says this one is not pulling from taxpayer money.
No losses will be borne by the taxpayers. Instead, the money will come from the fees that banks pay into the Deposit Insurance Fund.
The president also promised there would be an investigation into what caused the second and third largest bank failures in U.S. history.
My understanding is this bank was making longer-term investments and wasn't ready for the spike in interest rates caused by the Fed raising discount rate.
The FDIC is transferring all the deposits and assets of Silicon Valley and Signature banks to a new FDIC-operated bridge bank. In Washington, Lauren Blanchard, Fox 32 Chicago.
So everyone right now is focused on this. Fed rate hikes are front and center as financial regulators try to manage the failure of Silicon Valley Bank and Signature Bank. Goldman Sachs came out and said it expects the central bank to halt rate hikes. And joining us now to talk a little bit more about this is Fox Business Network contributor Phil Flynn. Phil, it's been a while. Thank you so much for joining us on the show today. You're muted. You're going to have to unmute. You know it always happens when you're live. Sometimes people are muted. So unmute for us and give us that excitement one more time.
Yeah.
There you go.
They didn't want to hear what I was saying anyway. Because anyway, no, it's great to be back. And I always love when you call me when there's a crisis brewing because, all of a sudden I become popular again. I don't know if that's a good thing or a bad thing. But, yeah, the reality is a lot of people have a lot of explaining to do. This failure really in this bank in California is really unacceptable. And this is something the Fed told us couldn't happen. The Federal Reserve basically came out and said, after the 2008 crisis, we've shored up the banking system, and that even Janet Yellen, who's now the Treasury Secretary, said that they did such a good job that we would never have another crisis in our lifetime. And here it is. And it's here, I think, mainly because of bad policy, but also bad fiscal policies in Washington, where we continue to spend a lot of money and signal to the global markets we're going to continue to do so, creating inflation and creating dislocations in the banking sector.
Phil, there's a lot of people watching right now. They may be just like me. They have their money in a bank. Can you talk about how this collapse actually impacts those who do have bank accounts?
I think right now everything is going to be fine. There has been kind of a run on the smaller banks, the state-owned banks, as opposed to the federal banks, because people are nervous. And I think the Federal Reserve, the Biden administration, and the bank regulators did the right thing by trying to calm their fears by backstopping these two banks. So that should alleviate part of the problem that we saw with the Silicon Valley Bank, where people were pulling out their investments. And it's kind of interesting. This is probably one of the first bank failures basically created, from a bank that, lent, took in a lot of deposits, and bought, treasuries with them and ended up having to sell those treasuries at a loss. And so the Federal Reserve is really going to have to look at this bank and solve the problems. But I think what they're going to find out is that the Federal Reserve is making a mistake. The recent historic increases in interest rates are coming too hard and too fast, and it's going to create more problems than it's going to solve. And I think that this is a wake-up call with this bank failure.
Very interesting. You brought up the interest rate. So I want to ask you a question related to that, because it's a question that all of us have. Do you think the Fed will continue to hike those interest rates?
I think they're going to have to pause, which is really hard for the Fed because, Jerome Powell spoke last week in front of Congress talking a tough game against inflation, saying that the Fed was going to have to be more aggressive raising interest rates and that they were going to really come on strong because they were worried about inflation. Well, guess what? Here we are just a week later and the bank is failing. And if the Fed continues along that same path, that's going to create more stress in the system and we could have more banking failures as we go forward. So the Fed has to reevaluate their position. I hate to be critical of the Fed. It's easy to Monday morning quarterback, but this is the Fed that told us that inflation was transitory. They let it run too far. And now in an effort to quiet inflation, they've been acting too aggressively, and I think they need to back off. The Fed needs to be quiet, let the impact of the recent interest rate increases take hold, let the market calm down, and if inflation is still a problem, then let's do it in a more measured pace as opposed to the way that they're doing it, as they said themselves, with a blunt instrument, which is causing a lot of collateral damage in the economy right now.
No doubt. We'll all be watching. Phil Flynn, it's always a pleasure to have you here on First to Fourth. Thank you so much for being with us today.
Thank you. It's great to be here.
All right.